Hey everybody, are you ready for a discussion on an OCC interpretive letter? I mean, we're talking riskless cryptocurrency. All right, well, there's a little bit more than that. It's actually Interpretive Letter 1188, just came out, hot off the press. It's about national bank engagement in riskless, that's what it says, principal crypto asset transactions. Now, what's actually in here? The letter itself confirms that national banks may conduct riskless principal transactions involving crypto assets, including those that are not securities, as long as it's done safely, soundly, of course. The riskless principal transaction is essentially a blink and you miss it moment where the bank buys an asset and immediately resells it to a customer under a prearranged offsetting order. Okay, that's why it's riskless. It's already happening. It's prearranged orders. The bank never holds, let's say, the inventory except in rare settlement failure situations. So think of it as a bank stepping briefly onto the dance floor, just long enough to spin the customer into the right partner. So it's like just a real quick, hey, blink and you miss it type moment. They're there, but they're allowed to do it. So the key points of this interpretive letter: it is fully permissible. Right now, the OCC finds that riskless principal crypto asset transactions qualify as part of being the business of banking, supported by the bank's, let's call it, incidental powers as they look at it, all right? Banks already act in this manner. So they're just saying that, hey, this is just new tech, same song type situation, right? It has stronger alignment, this number 2, of existing banking activities. So the OCC is identifying a couple of different things, one of them being the functional equivalence to existing brokerage roles, because banks already broker securities, derivatives, futures, other financial instruments as well. And there's the logical outgrowth of crypto custody. Banks can already, be custody of crypto. They can buy and sell assets at a customer's discretion, and they can use third-party providers for the execution. Something else, it does actually, according to the letter, benefit customers and banks. The letter notes the advantages that a customer can transact crypto through a regulated bank instead of going through unregulated exchanges. That's good. It means the banks can act as a buffer between the customers and the, anonymous and synonymous high-risk counterparties that are out there. And this can also diversify and expand the bank's customer base in growing markets. So there are some benefits. I will agree with most of them on there. The risk, though, that's a big area. The risk, though, for financial institutions are more familiar and more manageable. We've heard this in interpretive letters before. The principal risk is going to be a counterparty credit risk and settlement risk, which that does mirror the riskless principal securities in transactions, or the perfectly matched derivatives, or other intermediation functions that, banks already have mastered. And the market risk is minimal because the bank offsets the trade instantly. Operational risk from distributed ledger settlements are acknowledged, but treatment as variations on technologies the banks already use. And there is still state banks authority that supports, coming to these conclusions that state banks already conduct riskless principal security transactions, crypto asset activities under evolving state frameworks as well. And no state law prohibits activity with crypto. So this factor doesn't really weigh heavy against the permissibility. So, to wrap this all up, Letter 1188 gives national banks a green light to function as riskless principal intermediaries in crypto asset transactions, as long as they are managing the risk, like they should with everything, comply with all applicable laws, I hope they do that with everything as well, and operate in a safe and sound manner. All right, there's no doubt about it. When we look at what's happening in the industry, we are becoming much more digital and crypto friendly. And here's just another OCC letter to prove that it's happening. Folks, there's a lot more to come. And for now, class dismissed.